Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news international data is scrambling how central bankers are assessing their risks. Firstly, this morning in China, house prices are rising fast again, and it's pervasive. A private survey shows that average prices increased more than 13% in the first quarter from the same period a year ago in 100 large Chinese cities, including the 4 largest ones, 32 second-tier cities and 64 smaller ones. They were up more than 20% in a quarter of them. But industrial profits were sharply lower again in March, down 3.3% compared with the same period a year ago. A year ago, we were reporting this was up almost 12%. A month ago, we reported them as down 14%. So the February to March decline seems to have been arrested. It is this continuing reversal of profitability that is probably behind the sharp turn in the Shanghai equities market, which was down 1.2% on Friday. In the US, their advanced flash report on GDP growth for the first quarter of 2019 has delivered a positive surprise. Their economy grew at a 3.2% rate, suggesting the 10-year recovery retains momentum, despite recent fears that the year was off to a slow start. It is growth of this kind that vindicates the Fed's 2018 rate hikes. Equities rose on the news, but bonds and the greenback fell. The high growth but low inflation signals from this data have scrambled the views on what this means for the Fed and its decision later this week. Sweden is the latest country to signal dovish policy pullbacks, signals that drove down the value of their currency. They follow the Bank of Canada, who abandoned a tightening bias last week after the ECB, Bank of Korea and the RBA all flagged growth risks in the past few weeks. And in Singapore, their central bank is warning that the slowdown in the city-state's economy could continue for several quarters. Their data showed some unexpected growth weak spots as the growth momentum wanes. In Australia, markets are betting that there will be a pre-election May interest rate cut. The next RBA review is on May the 8th, and the election is 10 days later. The RBA's track record shows interest rate cuts often come in May, and the easing cycle is often immediately after a quarterly inflation drop, and an election campaign is no barrier. The US Treasury 10-year yield is now at 2.50%, and that's 3 basis points lower than Friday. Gold is up $8 from Friday to $1,286 an ounce. And US oil prices are sharply lower today, just now down to just $63 a barrel, while the Brent benchmark is unchanged at $72 a barrel. The Kiwi dollar will open this week firmer this morning at 66.6 US cents, which is back close to where it was this time last week. On the cross rates, we're more than 1 cent higher at 94.7 Aussie cents, and against the euro, we're firm at 59.7 euro cents. That makes the TWI at 71.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.